Good morning, everyone, and it's great to be here in Lund, and thanks to the BioStock team and his owner for the invitation. And as you probably could imagine, then I'm probably the person who traveled the farthest, from all the way to Hong Kong to this town called Lund, in Sweden. So I'm very happy to share my next 20 minutes. Obviously, my speech is only between you and the lunch, but you can treat this as your appetizer. So, well, first of all, on myself, my last name is actually Pay, P-A-Y, literally, so I have been always on the pay side. So I actually wear two investment hats at the moment. One is I am the venture partner for a U.S. North Carolina-based VC firm called the Pappas Capital. That was actually co-founded by the former CEO, International for Glaxo, and the former chairman of Roche, Dr. Franz Humer. My other title, I serve as the Chief Investment and Strategy Advisor to the chairman of Hong Kong WinHealth Group Corporation, which is actually based in Hong Kong, but with a huge operation throughout Asia, especially in mainland China. So, well, a little bit overview about WinHealth and our group of company. The company has established itself since 2006 as a key player in Far East in securing commercial rights. In other words, it has to be a commercially available kind of a stage asset where we can then make an investment to introduce the product into two major markets. One is China and one is Japan. The company is well, invested. Primarily, our second largest shareholder is a Menlo Park, California-based VC/PE company called Life Capital, L-Y-F-E. They're both also VC and also PE. And so then, our strategic focus is on medical product with mature market presence in any of the, I would say, close to 200 member country of ICH organization. ICH is a clinical trial standard setting organization where they offer mutual recognition for a regulatory pathway. And of course, we obviously prefer that the product has been already approved by US FDA, EMA, or PMDA of Japan because it does carry more weight. At the same time, of course, it's more costly to run approval, to do clinical trial, to even raise money to support your US and European approval. So over the, years, we have basically, since our inception, we have, operating in the space of what we call the CSO model, so that stands for contract service basically marketing sales organization model. But then up until lately, we have actually, gathered together a pool of funding from all of our investors based in the US as well as in Asia. So we were able to actually jump into the game a little bit earlier, other than waiting for all of your clinical trial has been approved in China or Japan, and then we will do just the sales part. But now we actually can go a little bit forward. For example, that's why I'm here today, to target those Nordic company with medical product, primarily therapies, that are at the brink of approval by the regulatory authority here in US or EU. And of course, we also are very interested in product or business model that are actually made and originated by the European company here in Nordic, but not being able to actually have enough money to basically get a US approval. We can still take it as long as it can be approved in a cheaper, low-cost country like Mexico or Colombia, because they happen to be an ICH member. So there is a regulatory pathway in China that many of you may not know, where you actually spend all your time and just raising money, aiming for the US approval. But in fact, a Mexico approval or even a Ukraine approval, as long as full approval, is good for China. That's why I'm going to show you the next slide, how we can do that. The greater China market opportunity, of course, is huge. It represents an immense and rapidly evolving market for all medical products, but it's also very crowded. So driven by aging population, rising healthcare expenditure, and of course the government focus on healthcare reform. And the market size of the Greater China area is projected to be by 2027 topping 2.3 trillion RMB. That is roughly about 330 billion US dollar. So the opportunities are vast. And so China's healthcare system, is almost comparable in the future to the combined size of both Europe and US, not considering there's also a traditional Chinese medicine market size there. So that's why when we talk about the overall size, it's for all Western medicine as well as TCM. So obviously, to enter China, the market is, it will be difficult for many, European or Western company. It took. I worked for J&J, Pfizer, Takeda, Bayer all my life. So it took many multinational corporations almost 40 years to build their infrastructure and footprint and knowledge in China. So it's very, difficult and complex, and that's why you need partners. Okay. So the challenges for European company are obviously, navigating Chinese regulatory landscape, which constantly changing, and companies must be updating on the latest changes to take advantage of some of the opportunity or some of the compliance issue. And of course, understanding and adapting to cultural differences is also crucial for successful market entry. And building relationship, trust with local partners and stakeholders is essential. See, the Chinese market is highly competitive, with both local and international company vying for the market share at the same time. So then your product has to offer a very unique value proposition to enter the market. So it's not that you just have a product, you want to sell to China, China's market is big, you can come in. No. Because everybody knows that, everybody wants to get into the Chinese market to get a piece of that. And that's why you have to be able to differentiate, where your strengths are. Then, of course, in the past, the West has been always worried about, intellectual property and things like that. And of course, that's very important. It's vital, to keep your interest. But then again, many companies have, choose a different way to, occupy the market first and then worry about the IP protection later. That's another strategy that I have seen some multinational corporations have been using. But our business model is, the good thing is we don't touch your IP and we do not steal your manufacturing job, like Trump says. So we are basically handing money to people with a mature product. You have already taken the risk, bring a drug into a market where we will take the rest of the risk by understanding there is a market potential for that product. So then we will try to buy the commercial rights for Pan-Asia that includes both China and the Japanese market. These are the two largest markets in Asia. And then I will unlock those market potential for you and share the sales royalty. So then the royalty, the money you got, can be immediately reinvested into your early stage, development. So then creating a good ecosystem. So this has been a very good model. And of course, having to do everything yourself, other than all the challenges I mentioned, is very daunting. And of course, supply chain, as we see in the COVID time, is also very disrupted. So then almost certainly for a small to medium-sized European company, it's extremely hard to even try to, make your efforts by yourself. And that's why help is on the way. So I want to introduce you another regulatory pathway that many small companies may not know of. Of course, big pharma know about this, but big pharma will then block those knowledge, the smaller company, so then they have no competition entering markets like China and Japan. So in China, there is an island south of Hong Kong, and it's called the Hainan Island. Literally means South China, island. And so in this island, there is a city called the Boao, and where the famous forum, on economy is held each year with world leaders. So the reason why this particular market entry is even possible is because, as you know, China now has a lot of people, 1.4 billion people, but among them, 300 million are middle class. So that's already bigger than the entire population of the US. They can pay out of their own pocket. So people have money these days. But what they don't have is they don't have visa, Schengen visa to the European country. So in order to avoid massive 300 million potential patients coming to Europe or the US, jacking up the price of the hotel or crowding the clinic, we want to make innovative drugs available right in China in an isolated island like, Hainan, where people have to take a flight to go there to seek treatment and then return to the mainland and coming back 3 months later. So this model has been existing for a long time, but not many of you are aware of this. And what is the pitfall and the risk and the good advantages of this model is following. So number one, very limited awareness. Many European companies are not fully aware of the Hainan-Boao route and its benefit, leading to missed opportunity for faster entry. And then this includes, misperception that people think only US FDA, PMDA of Japan, and EMA-approved product can be then somehow made its way to China. Is actually wrong, because the ICH organization represents lots of member countries. To do a trial, to get approval for one of your innovative product is doable, in those markets. But once you get one full approval of any ICH member country, as long as they are, friendly to China at the moment, then China would then allow that product to be immediately sold in that market. So I'm actually working with a Spanish company at the moment. Then their entire business model, they have 3 vaccines. Their entire business model is to develop, research, and distribute and manufacturing drugs for the third world country or in China, not for their home market in Spain or EU. So they actually have a 60 million revenue each year, employing lots of workers in Spain. So then their product got sold into Mexico, where one of the product is for female urinary tract infection, which is really recurring. And then this model made available, then they can open up lots of clinic in Cancun, Mexico City. So women from North America, Canada, and US can fly there on vacation and get the medication done. So it's a proven model, And it's also done and introduced into Boao, into this particular route. So going forward, if we can find any of your product, of course, we prefer European or US approval, but if not, ICH approval is good enough. So then we can then help you to introduce a product into Hainan, and then we will then immediately create lots of real-world usage data. And those usage data will automatically qualify you to get a fast-track approval for national filing in Beijing. And then of course, we can then significantly reduce the numbers of patients needed for approval, trial, registration, saving money down the road, but also saving time. So then that way, your product has been already marketed, through the Chinese media, although only in that island, but it's a faster way, to get everything accelerated. And then of course, the regulatory landscape in China is constantly evolving, and that's why we're here to, help you to stay informed. And of course, lots of European companies may have some resources strain and things like that, which we would let you know, say, it's a zero risk to you, zero cost to you. We'll take care of the marketability. We'll take care of acquiring your rights, and also we will also take care of the expenditure for the clinical trial purposes. So my last one is to demonstrate, our unique value proposition, so we can, use our regulatory expertise to, help you to go through all of that, facilitating quicker market entry, and also pathway allowed to use the real-world data to support, again, faster approval, saving money, saving costs, because patients in China, patients in the third world country also deserve to be taken care of. And then in terms of investment pathway, we usually work on 3 models. The traditional model being, you take care of the risk, you do the clinical trial in Japan and China, and then we will help you sell it. And the other way is, if the product is really good, it's only, say, 6 months shy of being approved by one of the regulatory authority, we're happy to come in, jump in the picture, and pay you upfront to get the commercial rights for Pan-Asia. We'll take care of the 2 largest markets in Asia, and then we will then do the clinical trial and then share the sales royalty with the licensee. And then market access is also, very important. And then, of course, the Chinese healthcare system, we provide, unparalleled access to all market with all of our knowledge. I want to give you just some quick example, about some of the deals that we have done following the 3 model that I've been talking about. The in-license services where we, acquire the rights, and we will then, obviously do what I said, what we do, and clinical trial, and also investment into the registration, and also we can also do co-promoting for one of the product already on the market and give you a helping hand under the customized CSO model. So I've done numerous project for multiple company, including big one, Pfizer, Amgen, Novartis, Roche, Bayer, and then of course under this Hainan Boao model, we call it MAP model, so Managed Access Program Services, where we have successfully introduced up to 30 products internationally, representing 20 companies so far. So future prospect, okay, looking ahead, we're committed, to strengthening our collaboration with Nordic medical product companies, and we're particularly interested, as I said, to, in products with proven efficacy and that address unmet medical needs with a unique value proposition. This is very important. And of course, the evolving regulatory environment is also increasing importance of innovative therapy, create a fertile ground for our future collaboration. I will leave some time, even, I still have 8 minutes left. In conclusion, we offer a comprehensive platform for Nordic company or beyond to effectively navigate the greater China market. At least our strategic approach, regulatory expertise, and extensive network provide a solid foundation for our mutual growth and success. So I want to thank you for your attention and look forward to having more dialogue, off the scene. And then I'm open the floor for any questions. Yeah, thank you.
Just to be clear, you can just raise your hand. We'll do it that way, and the microphone will come to you.
Yes.
The room.
Okay, please.
Thank you for the presentation. I was wondering, and I may be a bit blunt here, the audience here is primarily biotech companies.
Sure.
And China has developed over the last decade very strongly with respect to, growing innovation, move away from branded generics, TCM, to innovation. If I could ask the question, is today, or let's say between now and a year, the right time to actually go into China and talk to China partners? On the one hand, you would say, yes, of course, it's obvious. But on the other hand, China companies primarily are out-licensing their programs. The capital market is closed. IPO market is closed, which is different from the period prior to COVID, when a lot of companies were in licensing to dress up the bride so they could list the company in Hong Kong or Shanghai. Would a biotech company need to spend time at the moment to get their program licensed in China?
Well, it depends on the stage. And like I said, my other title, basically my job was to, make investment in the early stage. And that's where it's getting more politically, problematic between the two sides. On one side, the US government may not, allow US or Western company to invest into the Chinese biotech, especially early stage. And then while China has lots of money to pour, but then again, the European, government may not allow some of the Chinese money to get especially into those very early stage and frontier areas of technology. So I do see there's a disconnect here, and that's why our business model, for this company, WinHealth, is to stay clear of politics. We hand money only at late stage. Okay, we let you take the risk at the beginning. Okay, since you don't allow Chinese money to come in, then develop the product, using your innovation, the best brains in the world is probably somewhere in Europe, which we all admire. And then so we just wait around until the product has been proven and tested. And if you don't have money, I already show you another shortcut, then go to a cheaper country, okay? As long as they are ICH member, this is a secret Big Pharma don't want to tell you, then have it done. And then using the Boao route, you can immediately put this product into a 1.4 billion market access. And then going further, of course, you know, if we're successful and then the product was well reviewed or well received by all these patients with money paying out of their own pocket, guess what? You know, we're going to shorten our regulatory approval time with a national filing in Beijing. So and then we save actually money, and then we can then hopefully put this product on the reimbursement scheme of the national government. So then, of course, then we can talk about, you know, price setting, and maybe only at that time, maybe it makes sense for a European company to use maybe a CDMO, you know, controlled by the US in Europe or somewhere else, and to do the, you know, the development. So I wouldn't say if they're too early, you can partner with China, but then you have, you know, restriction on both sides, okay? And so it's a catch-22 situation. So the best way is to continue to maybe orientate your goals with the US, because the US can pour money, but then you have to move to Boston. Everybody has to move Boston these days. Even Chinese company who couldn't get cash or money from the Chinese government, they shut down, well, they actually don't shut down China, but they just create a new corporation in Delaware, and then have an office in Boston, and that's where, you know, money will be like a helicopter, money will pour on you. And I think, you know, the reason why the US have this specific goal to concentrate all their resources, knowledge, is to create this little ecosystem in Boston and around Boston, shutting down all the New Jersey, California, Chicago sites, where all the research only happen in one town in order to compete with the rise of China in the future, which it makes sense. It's a little bit longer answer to that question, but appreciate it.
Thank you.
Any other question before we have lunch? Okay, over there.
Just going a little bit on what he was saying.
Sure.
With America introducing the BioSecure Act,
yeah,
and now having a lot of European companies being doubtful on how to proceed for the future, how do you see this affecting Nordic companies that are wanting to target the American market first and then going into China?
Sure. Thank you for that question. The BioSecure Act is obviously you know, a very, you know, strong message sending, okay, by the U.S. politician to the investor and stakeholders of companies like WuXi. Okay, WuXi is a big company. I actually based in WuXi, you know, near Shanghai. The reason I choose to be based in WuXi, people at least know how to pronounce WuXi instead of Waxi or Wuxi, right? So WuXi is actually a global company with a Chinese name, but on their cap table, it's all US, so US, Japanese. So it's actually not a Chinese company. So this is the words of the game. So they hit WuXi as if they're hitting China, which is good for grabbing the votes during the year of the election. But at the same time, the clear message is to be sent to AstraZeneca, to all the big pharma who use WuXi, and also the investor of WuXi, okay, that we need to reshape the supply chain going somewhere else, you know. So then what the impact for small and medium-sized Nordic or European company is their cost base is being squeezed. Because WuXi is much cheaper, affordable. They can provide any services from A to Z, soup to nuts. So if you take away WuXi, guess who benefit from that? Of course, Big Pharma. Big Pharma can then see all the small company are running out of cash, no more runway, so then they have to exit, okay? They have to out-license, so it's good for Big Pharma. And this was why there's only one senator on the Republican side who actually opposed the bill, and his name is Rand Paul. Senator Rand Paul said, well, wait a second. This bill, although on the national security basis, served the purposes on the political side, but at the same time, at the cost of small and medium-sized company. So we have to be smart and find a new way to make money. And the way I propose this model is free of politics. Basically, we are only importing the product made by the greatest minds in Nordic. Thank you very much.
Thank you so much, William Pei.